You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. And today, before I begin, I want to remind you that there is a website associated with this particular podcast called wealthformula.com. And in addition to just having some general information and resources there, it's also the place you go if you want to sign up for some of our groups, such as our Accredited Investor Club, or also if you're interested in our private community, which is Wealth Formula Network. You can go to wealthformularoadmap.com for that. That's a course, and then it leads into this network. So anyway, just a reminder for you to check that out. Today I want to talk to you a little bit about cryptocurrency, and we're going to talk a little bit about the state of that world, and especially given what's been going on as of late. The markets have sort of recovered a tiny bit, but the digital currency took a beating in the last several months. It was wounded pretty badly. And paradoxically, I think what's interesting is that the undoing of the decentralized world, right? I mean, in theory, that's what blockchain and cryptocurrency are. It's the decentralized world. We're at the hands of centralized figures, whether that be Kwon of Terra, Sam Bankman-Fried of FTX. These platforms, ultimately, because of greed and, perhaps some simple, also, just incompetence or whatever, resulted in billions of dollars being lost by investors. Big deal. No one was immune either. I mean, this wasn't just a retail problem. There were companies that were, I think, of high quality and with good people in them, like BlockFi, that ended up declaring bankruptcy, and others, even like the likes of Grayscale Bitcoin Trust, are on the brink of insolvency now because of basically the breakdown and the ripple effects of what happened with cryptocurrency in the last few months. Now, digital currency has never been a favorite of the SEC. This is an institution with a deep distaste for the wild, decentralized West, because it represents a very difficult animal to tame, right? And the IRS also wants to dig its claws into digital currency. Why? Well, there is a lot of money not being reported by people who've held cryptocurrency. I've heard about people who've had, millions of dollars in cryptocurrency and have never reported. It's pretty mind-boggling that people would take that kind of risk. Of course, the IRS also has a major challenge, which I don't think is as easy to overcome as some people might think, but they have a huge challenge, and because it's very difficult to try to figure out who's misreporting. Bottom line is that the climate is right for some serious changes to the law involving digital currencies. Whenever there is some kind of a collapse or people lose a lot of money, it gives opportunities for institutions like the IRS and the SEC to dig their claws in with regulation. And I anticipate that that's, we're going to see more and more of that. And to discuss all of this, discuss the state of cryptocurrency and all the regulatory issues around it that may be seen, I have an expert in this field. She's a tax attorney who's very much involved in regulations and that sort of thing on cryptocurrency. So if you are curious of what might happen next in this world of blockchain, we will have this great conversation for you right after these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Andy Kramer. Andy Kramer is a global authority on regulatory, tax, commercial, governance matters that arise in trading environments and in digital asset transactions. She is sort of the, she is the person to go to if you have a question about cryptocurrency and the law right now. She is an attorney, went to my medical school alma mater, although she was in the law school, which I used to get kicked out of the library all the time. She also has a certifications in financial accounting from Harvard Business School and leading with finance also from Harvard Business School. Andy, welcome to Wealth Formula Podcast.
Thank you very much. Glad to be here.
So I want to start out kind of, obviously we can get into taxes and all that stuff later on, but, it's been kind of a rough ride for cryptocurrency, digital assets in the last several months. And I just wanted, for people who are really kind of hearing things in the news a little bit, but don't really understand the implications, would you mind kind of giving your perspective of sort of, the meltdown and sort of a summary of the meltdown that occurred?
Well, that's a tall order, Buck, but I'll try to
started with
Terra.
To
do it in bite-sized pieces. How's
right.
that?
Perfect.
What happened is, if we compare 2022, the end of 2022, to the end of 2020, the markets are still ahead of where they were previously. But in 2022, the market had been, maybe it was a bubble, who knows, but we started to have problems when first Terra, which was one of the stable coins, fell apart. And it brought down with it a number of other companies, or at least its demise is attributed to problems that other companies in the cryptocurrency space have had last year. And so it was almost as if there was the proverbial run on the bank, where one company goes down and then the customers of the next one are looking at it and saying, holy smokes, I really probably got to get my money out of here. Mm-hmm. And so it sort of became a domino effect, where it went from one to the next, referred to as contagion. And what we saw at the end of the year was a lot of people who had invested when the expectation was that the market was going to go to the moon forever, found that they were now forced to either sell their positions, or their positions were liquidated out from underneath them. And so as the market has been improving, the beginning of this year, we've already seen, just the last week, the market's gone up almost 20% for many of the popular coins and tokens. But for the people who were driven out of the market last year, they're still out of the market. They're not going to be able to, they have losses that they're not going to be able to just hold it and wait till the market goes up. And so one of the issues we have is who's still in the market. And I can tell you that there are a lot of investment funds and venture capital funds and others that are still very interested in and still active in the market.
If we can back up real quick, the big, probably it's important to kind of talk about FTX and Sam Bankman-Fried and what exactly happened there and what the implications for the crypto sphere was for that.
Well, if we look at FTX and its bankruptcy, there's a lot of arguments that can be made that is an exception to the rule, because when the company was filed for bankruptcy, the new CEO that was appointed for the bankruptcy proceeding is a man who had taken Enron out of bankruptcy. And his first filing with the bankruptcy court was basically, I've never seen anything that has been at such a mess as this. And so the reports are, and I have no direct information other than what we're all hearing in the press, but the reports are that either they were
weren't they sort of essentially they were using customer funds to invest or to lend to other businesses. Is that right?
And to themselves. And it was to themselves first through another one of their entities. They had a related entity. And so customers thought that their money was secure, their tokens were secure, and find out that they're gone. It's as if they went poof. And so another sort of piece about that, though, is I was trying to explain, and I wasn't very artful, is the fact that there may have been fraud involved in those situations. That's a different kind of a situation than the market itself.
That's right.
Has serious problems.
Right. Well, I mean, I guess to me, it seems like they're kind of part and parcel, right? I mean, now there's a lot of fallout from FTX, and because of some of the involvement of other major cryptocurrency oriented institutions. For example, I think the latest I'm hearing is some potential solvency issues with regard to the Bitcoin trust, the GBTC trust that allows people to trade effectively in a trust Bitcoin on the New York Stock Exchange. So could you talk about how that happens because of FTX? Like what I'm trying to get at is, what are these ripple effects? How come there's so many ripple effects from that?
Well, what we see is that when the market is not predictable, the talk had been for years that somehow the crypto market moved opposite to the stock market.
Right.
But when the stock market took a hit in 2022, the crypto market followed along with it, so that they weren't asset classes that were distinct from each other. In your reference to these Bitcoin trusts, what happens is that the market price varies so quickly, but the investors in these trusts are not buying Bitcoin directly. They're buying an investment in a vehicle that holds Bitcoin. And in fact, a number of those trusts have actually been trading below the value of Bitcoin itself, so that people might look at it and say, well, maybe that's time to, make an investment. But you have all sorts of other expenses because you're not just holding the Bitcoin directly. And so it's a pooled investment. And what we see is that those kinds of investment vehicles are distorting the prices. They also very often have a need to buy futures contracts. Many of them are invest in futures contracts, and they have to buy futures contracts for the closest month to try to make it as close to a physical position. And so there's all sorts of distortions in the markets themselves. Mm-hmm. So what's happened is people are concerned about the market, concerned about the 9,000 different kinds of cryptocurrencies and tokens that our prices are reported on. And so everybody that was sort of chasing the next big deal are now afraid that could it be another FTX situation? Could it be that there could be fraud, or that there could be self-dealing or other things that obviously hurt regular investors?
The irony of this whole thing, in my view, is that the fraud that occurred in a centralized company in FTX, and essentially took down, the entire decentralized world. And I guess that kind of gets me to talking about regulations, which is, something obviously a fair amount about. What do you expect the fallout from this to be? Because obviously it's a big deal. There's a lot of money lost. There was a lot of companies that went out of business. Even quality companies like BlockFi was filing for bankruptcy, and there's got to be some sort of legislative fallout from this. And do you think that that's correct?
Yeah, absolutely. The way that the regulatory world that applies to crypto has been pretty unclear. And the reason for that is that the Securities and Exchange Commission has the ability to regulate securities, and the Commodity Futures Trading Commission has the ability to regulate interest in commodities. And so what are cryptocurrencies? What is Bitcoin? What is Ethereum? What is Avalanche? Pick your one of 9,000. And so the SEC has been very vocal, saying that Bitcoin might be a commodity and that could be subject to the CFTC's jurisdiction. But they're not prepared to say that any other one is anything other than a security. And so what does that mean? Well, what that means is that if you're buying and selling these tokens, mostly tokens on various sorts of digital tokens, have you registered with the SEC to be an issuer of these tokens? No, people have not done that.
Yeah.
And so it throws into question the whole validity of the market if the SEC is going to be able to say this is a security and you violated the securities laws by not registering as issuance of securities. And they just recently are going after the CEO of Genesis, which is one of the crypto lending firms, where people thought that they were putting their crypto and just letting Genesis lend the crypto to somebody else and they get a big return.
Yeah.
But it turns out that if they carefully read the documents, their crypto was being pooled with everybody else's crypto. So now it's more like an investment vehicle. And so the SEC has gone after the CEO saying you issued unregistered securities.
Right. So all of the things that you're saying, though, are kind of, they're not actually terribly new, right? I mean, this issue has been of securities, has come up over and over again. XRP, Ripple, has been on a lawsuit for a long time, right? And I don't know if that's resolved itself yet or not, but do you feel like there's an acceleration of that coming, or what do you anticipate the actual, true repercussions of what's going to happen next in the near future to be?
Well, I think that one of the key things is who's going to be on first base for being the regulator. And there were some bills introduced last year and some talk that the CFTC would be the primary regulator of various cryptocurrencies. And the SEC, which is a much bigger agency and has a lot more resources behind it, digging its heels in and saying, no, it's our job to regulate. And so I think that it's quite possible that we're going to see some legislation that's going to tell us, if anything happens in Washington in 2023, but there may be some legislation that's going to have to clarify this.
Let's switch a little bit over to the topic of cryptocurrency, taxation, that kind of thing. One of the things that you were talking about was how the SEC may try to look at these digital currencies as securities. Does that in any way change how cryptocurrency would be handled tax-wise? Because right now, one of the major benefits is that it's not really considered, portfolio income. It's like personal property, right? And so cryptocurrency is not subject to the wash rules and things like that are tremendous advantages. Does that potentially change if there's changes to the definition of cryptocurrency via the SEC?
Well, it turns out that all of the regulators have their own definitions And so the SEC's definition of a security includes investment contracts and things where people are pooling or sharing the risk is being spread out. The way that the tax code works is each Internal Revenue Code section that addresses a security defines it. And stock and securities is a term that goes throughout the Internal Revenue Code, where stock is meant to be, shares in a company. And a security typically means debt instruments, borrowings. And so we don't have the same broad definition of a security that there is in the securities laws in the tax world. There were some efforts to amend the wash sale rules to include digital assets as assets that would be, so instead of, it would be expanding it, not saying that they're securities, but saying, oh, by the way, we're going to stick those in as well.
Meaning that there was an attempt to make them subject to wash rules. Yeah. Obviously, that would
but not by calling them securities, by saying that digital assets would also be subject to the wash sale rules. That didn't go anyplace, but that was the way of approaching it. And so I would answer your question by saying that just because the SEC says something is a security does not mean that would become a security for tax law purposes.
Got it. Now do you work with individual in taxes as well, or do you work primarily with in policy and institutions and things like that?
I work with individuals as well.
Got it.
I'm a lawyer, not an accountant, so I don't fill out tax returns.
Right.
But when the going gets tough, then the accountants and the individuals want to know what
then they need you.
Right.
So let's talk a little bit about tax law. What do you think that people holding cryptocurrency now need to know? What are some of the essential things that you need to understand if you're going to own this stuff and and report your taxes appropriately?
Okay. Well, the IRS has gotten really cranky about the fact that the press talks about how there's, millions and millions of people who own cryptocurrency, and 11 people reported it as assets on their tax returns in let's say 2018. 2019 was the first year that the IRS put a question on the tax return about cryptocurrency. And each year they've moved the question closer to the front, so that right now, if you're doing a 1040 individual tax return, right after your name, rank, and serial number basically is a question about whether you have, in 2021, the question was whether you held any virtual currency. And the draft tax returns for 2022 are out, and the draft instructions for 2022 are out. We don't know whether the IRS is going to change them between now and when returns are due in April. But right now, they have changed it to a digital asset definition, and they've made it much, much broader, so that whether all taxpayers, whether they've held cryptocurrency or not in 2022, are specifically asked a question on the very top of the first page, which is, did you have any of these types of transactions in digital assets in 2022? And you have to either check yes or you check no.
And that's kind of a big deal, right? Because lying there is a big problem.
Lying is always a big problem, but by submitting your tax return under penalties of perjury, if you check the wrong box, if they can determine that you did that intentionally, that could be criminal tax fraud. That's not a pretty picture.
Yeah. And it's interesting because, not me, but I know of people who've been in the Bitcoin game for a long time, and they have really just been in the shadows, and they do not want to report anything, and everything that's happening is completely decentralized and stuff. And in talking to people like that, I always ask them, like, how do you plan? Well, aren't you worried about like going to jail? Like, I would be worried about going to jail. And they generally say, well, how are they ever going to figure it out? Because I'm using decentralized platforms. I'm holding everything in cold storage and moving only to, only using these swaps, these digital swaps that are not involved with central platforms. How do you anticipate that could be tracked by the IRS?
Well, I would ask a question back to the people who are taking that position, which is when cryptocurrency has been stolen or ransomware. Mm-hmm. How is it that within a few weeks or whatever, there's a news report that the Department of Justice has seized back, 80% of the coins that had been used in ransomware or had been stolen? People think that the market is a anonymous market, but it's not. And there are very, very sophisticated tracking systems that companies use that can actually tell you, they don't know your name, but they know what accounts are related to get together and where they go. And the IRS is using that kind of information to keep track of people who are investing in holding cryptocurrency. And so I would think that the tax world is not as opaque and easy to scam as people think it is. And I would be very concerned that somebody could find themselves with serious criminal tax fraud by not keeping, by not properly reporting. That leads us to another point, though, Buck, which is, what is proper reporting? Yeah. For example, the IRS takes the position that mining, when you get, when you get new crypto from a mining activity, that your mining is taxable when you receive it. Well,
wait a second. So it's taxable when you receive it. Is it not? So is the price? Okay. So you're saying as soon as it's produced, whatever price it is at that point, it's taxable at that.
Exactly. So let's assume that you were doing some mining at the beginning of 2022 and you have a $400 million gain because you are very successful and and then by the end of the year, it's not worth 400 million, it's worth $10. Technically, as far as the IRS is concerned, you have taxable income of $400 million.
Interesting. So for those who are mining, the smart thing really to do is immediately convert, into US dollars. And then, if you want to buy cryptocurrency, if you want to buy Bitcoin or whatever, after that, then, go ahead and buy it. You're not going to have, at least your own
you got
risk.
The cash.
At least you got cash. Right. Yeah,
right.
That makes sense.
Exactly.
Makes good sense. What other things should we be aware of?
Well, staking is another type of proof of staking instead of, proof of work. And the staking side, the IRS takes the position that staking is taxable at the point that you, receive it, if you will.
Are those considered like dividends, or how are those looked at?
Well, they're treating it as ordinary income.
Oh, okay. As income, yeah.
Because as if you've earned income, that you've earned it. Uh-huh. And so there's a lot of differences of opinion about whether some of the IRS's positions are correct. So let's go back to that 2022 tax return for a minute. I have to check a box which asks if I did any mining, staking, if I had any NFTs, things like that. I have to check the box, yes, assuming that that's true. But now, does that mean that I have to report them on my tax return? I may take the position with proper advice from somebody who knows what they're talking about, a trusted advisor, that maybe it's not taxable. So I may be checking the box saying I have these transactions, but then not reporting them because I believe that it's not, legitimately believe that I'm taking a position that it's not taxable. And so that's an open question as to what do you do in those situations. And those issues also apply to crypto lending, because most of the lending platforms have marketing materials which say this is just like a loan, and you don't pay tax on a loan when you lend money, but the tax law treats lending money as a loan, but transferring property is not necessarily within the definition of a loan. And so we have situations where it's very important to figure out if your crypto loan is really a loan for tax purposes or whether you've sold it and then bought it back afterwards.
Oh, interesting.
Again, with very different tax results.
Yeah, yeah. What are some of the things that that come up most often in your practice with people who are, who've got significant cryptocurrency holdings?
Well, people who have significant holdings that are appreciated are very interested in making charitable contributions where they can then get a charitable contribution equal to the value of what they're donating. Mm-hmm. And so basically they don't have to pay tax on the appreciation, but they can get a big deduction. And so there are a lot of, I work a lot with both donors and charities about cryptocurrency donations. Mm-hmm. A market that we've not talked about, which is an interesting crypto digital asset piece of the world, is the non-fungible token market, the NFTs, and work with a lot of creators and companies that are creating NFTs for purposes of brand recognition and things along those lines. But a lot of it is tax questions like, do I have to pay tax on that $400 million that I have in my staking or my this or that? Yeah. And the answer varies. It's not always going to be the same answer.
Yeah, absolutely. Do you see, are there any laws that are different for 2023 than they were for 2022 that we should be aware of?
Well, there was a reporting rule that I believe the IRS just extended. It was going to kick in at the beginning of 2023. So we have an extension. One interesting thing that just happened is that the IRS, the Office of Chief Counsel is the IRS's lawyers. They're in-house lawyers, if you will. And they just came out with a memorandum last week, which says that if you're making a donation of more than $5,000 of a cryptocurrency, you must have a qualified appraisal. And that's what the rules have said, but a lot of people assumed that that was not necessary, primarily because you could look on Coinbase, you could look on you could have looked on FTX, all sorts of other places, and come up with what's the value for that moment in time. But the IRS memo that just came out last week says if you don't have a qualified appraisal, then you cannot get a donation deduction. And the definition of a qualified appraisal requires somebody who has 2 years of experience in valuing these assets and all sorts of things that make it very difficult for qualified appraisals to exist.
Wow.
So they're really making
it difficult.
That one down.
Yeah.
Yes, exactly.
Yeah. Well, very fascinating stuff here, Andy. Tell us a little bit more about your practice. What kind of what kind of clients you have, and how to get in touch with you.
Well, effective January 1st, I started my own law firm. So I left a big firm where I'd been for 30 years, and I now have A.S. Kramer Law. And the website just went up last week. And
is it askramerlaw.com?
askramerlaw.com.
askramerlaw.com. Very good.
A.S. Kramer Law. And it's Kramer.
Okay.
Law.
Got it.
And so I work with people, individuals and businesses that are trying to solve really complex problems in the markets. Regulation, tax, energy products, renewables, ESG issues. And so I'm not the garden variety wills and trusts type lawyer, but I do work with venture funds, multinational corporations, and basically I'm doing the same type of work now that I did at the big firm. It's just that I'm doing it on a separate, in my own practice, where I feel that I can devote more, meet my clients' needs as well as play to my professional strengths. Right. So
great. Well,
and
fantastic.
They can reach me at Andy at askramerlaw.com.
Got it. Andy, and it's ANDIE at askramerlaw.com. Andy, thank you so much for being on Wealth Formula Podcast and giving us a little update on the crypto market and taxes.
Well, thank you so much. I appreciated talking with you.
We'll be right back. Welcome back to the show, everyone. Hope you enjoyed it. I'll tell you, I think that in the grand scheme of things, I think that cryptocurrency is going to be okay. I think that the reality is this is an extremely new space, right? If you think about it, Bitcoin started in 2009. I mean, it's like 14 years old, this whole thing. And it's very powerful technology. So I think it's going to come out just fine. And I think that it's just a matter of, probably creating a little bit more regulation to protect investors. And, and purists in the blockchain space will argue that that's wrong and that's the antithesis of what this whole thing is about. Maybe, but the problem is you also have to face the fact that people are, they're bad actors in this area, and there needs to be some regulations to try to protect investors to a certain degree. Because of that, I think that, one of the things to consider when you are potentially buying cryptocurrency is how you think that those particular projects will do if there's additional regulations. I think, for example, I've been interested in Terra for a long time. I own a lot. Saw it go way up, saw it would go down. But the thing I like about that project is they've always made sure that they dotted their I's, crossed their T's, and would pass every test. And those types of things I think will help in the long run, because that's the type of thing that corporations want. That's the kind of thing that governments want, et cetera. Anyway, that's my take on it. And that's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.